Hello, welcome to the weekly chart review. I'm Selena Nicholas, technical analyst at XM.com. Today's August 31st, 2016. Let's start with the EURUSD on the daily chart. So we can see EURUSD has turned more bearish in the near term after breaking below the 100-day moving average. The market has retraced more than half of the rally that took place from the July 25 low of 1.0951 up to the August 18 high of 1.1365. So it's down halfway, more than halfway. It's fallen below the 50% retracement level, the Fibonacci retracement level. And now this level is acting as resistance to the upside. It's around 1.1157. So prices are now testing the 50-day moving average. It was acting as support until yesterday and earlier today. Now prices are falling just below it, heading lower. So we have the 61.8 Fibonacci coming into view. It's the next important support level. If we look at RSI, it definitely highlights the bearish bias since it's falling and it's below 50 now in bearish territory. So the market would really need to move back above the 100-day moving average at least to weaken this downside momentum. If we look at the pound dollar now on the daily chart, so GBPUSD maintains a neutral bias. It had fallen from 1.5015 down to 1.2794, and since then we've had consolidation. The 50-day moving average is capping the market to the downside, but overall it's GBPUSD maintains this neutral bias in a broad range between 1.2860 1.3360. So it's been bouncing between the lower and upper range. And if we look at dollar yen on the daily chart, we can see the upside momentum continues today. So short term, dollar yen is bullish. It's crossed above the 50-day moving average, which helped upside momentum as well. And now we have dollar yen in the 103 yen handle, and next target now is the 104 level. So dollar yen is expected to continue its upside momentum. If we look at momentum, the RSI, it's above 50 and it's still rising. So the outlook does remain bullish from here. If we look at the Australian dollar versus US dollar, it reversed the uptrend from 0.7144 up to 0.7755. So this bearish phase started August 11th. It's still clearly intact, especially after falling below the 50-day moving average. This strengthened the bearish case. Support is now at the key 0.75 level, and then below this the 200-day moving average comes into view. That's at 0.7464. The market would need to rise back at least above the 0.76 level would weaken the short-term bearish phase. But if we look at RSI, it's below 50 and it's in bearish territory and still trending down. So more downside is likely. Thank you very much for watching and have a great day.